Hi everyone, this is Ben Ryan. I'm in the studio today with energy policy analyst Joe McMonigle. We're gonna just kind of go rapid fire questions here, look at some near-term catalysts, and then kind of get Joe's outlook for oil and markets moving into the summer. So Joe, starting off here, we have this Russian OPEC production freeze catalyst coming up on the 17th. What are your expectations there? A lot of OPEC members have said that a production freeze is imminent, it's going to happen. What's your take on this?
Yeah, so there's big news last week when the Deputy Crown Prince of Saudi Arabia said they're not planning on participating in a freeze if Iran doesn't participate. And I think OPEC and other participants were sort of led to believe that the Saudis would participate regardless of Iran. So I think that sort of splashed cold water over this whole freeze idea.
I mean, two huge producers.
Absolutely.
There going at it.
But then today you had, or not today, yesterday I guess you had Kuwait on Tuesday, had Kuwait come out and say they believe an agreement is imminent for this April 17th meeting. So I actually don't think, I believe the Saudis. I don't think they're going to participate if Iran doesn't participate. So I don't think there will be a freeze, but there's some question about whether they'll even do the meeting now, because what they don't want to have is some kind of big letdown. They built up high expectations that there'd be some kind of control over production in the market, and now that's not going to happen if the Saudis don't participate. So I think you might have some kind of, if they could figure out some way to put lipstick on this pig, to keep the this freeze momentum going.
Sure, it's all about creating this perception that something's going to happen. And
yeah.
If that has meaningful impact on oil prices for an extended period of time, then I guess they're doing something.
Yeah, well, I think their goal is to put a floor under prices.
Yeah.
So I don't think they really think they're going to be able to pump up prices with this idea of a freeze. But if they can prevent prices from going below 30.
Sure.
I think they feel like they've accomplished something. So we may see some other incarnation of this before next week, but I wouldn't be surprised if it just gets canceled, because there's just a lot of downside risk to having a meeting if it's doesn't meet expectations.
Sure,
of what it's supposed to
event
do.
risk there.
Yeah,
and then looking after that in the summer, in June, first part of June, you have an OPEC meeting. That's a semi-annual meeting. What's your expectation there? Do you expect anything hard, I guess, to happen there?
That's right. So 45 days after this freeze meeting on the 17th, on June 2nd, is the next regularly scheduled OPEC meeting. It'll be the first one of 2016. Of course, there's lots of speculation, even among analysts, who think that there could be some kind of cut in production, which we strongly disagree with. We think it's way too early for there to be any kind of production cut. The Saudis really want to see this entire year one of very low prices, so that it sort of discourages and delays some of this existing non-OPEC production, and maybe even some OPEC production as well.
Yeah.
So that by the end of the year, you're in a position where there's some balance, and they could be in a position to make some change in OPEC policy. So we personally don't think there's going to be any change in OPEC policy, but there's going to be lots of market speculation and drama surrounding the meeting. We're hoping to actually go to Vienna for the meeting and do some reporting for Hedgeye, and so we'll keep an eye on it. But really the next meeting of any consequence will be that December end of the year OPEC meeting, because that's the first time that any serious consideration will be given to changing OPEC production policy. I'm not saying they're going to do it, and I don't think we will know until probably the end of summer, early fall, for some signs that they might be considering it. But that would be the first point, I think, that the Saudis would be on board with doing something.
And that's really the first time that you've said that, because you guys have been right this whole time, saying that most of this is just newsiness. The likelihood of a production cut is non-existent, basically. And you use the example of Iran. I mean, there's no incentive there whatsoever. And you correctly pointed out that they were going to try to increase production as fast as possible as soon as sanctions were lifted.
Yeah, I mean, OPEC as a whole is a very mixed bag. I mean, some of the non-Gulf members of OPEC want a production cut because they want immediate action on prices.
Yeah.
The Saudis are much more sophisticated than that, and the Kuwaitis and the UAE. And I think they know that if they were to cut production now, it would lift prices and do nothing but give a lifeline to U.S. shale and other non-OPEC producers, and then they'd be back in the same situation that they're in now, and the last year and a half would be all for naught. And so that's why we think it's way too soon for any kind of production cut consideration.
Sure, and looking at what's happened this week, near term, what you've had is this trend of commercial crude inventories just reaching new all-time highs. This week you had an inventory draw coming off a very high level. What's your take on that? I mean, it was a newsy item yesterday with oil prices moving higher. I mean,
I think it was a surprise because most consensus was that there'd be another build. But there was aggressive refinery utilization and imports were down, so you had a draw in the stocks. But I wouldn't expect a series of drawdowns now in the coming months. I think we're still in a situation where we've got a supply glut. We're going to keep adding to the inventories, and really until we get probably until the late summer or early fall. I think that's when you're going to see really sharp declines in U.S. production. I mean, right now we're at about 9.1 million barrels a day, according to the last EIA report. Remember, that's from 9.7 million barrels a day in April of last year. So we're almost 700 million barrels less than we were, last year at this time.
It's in the works,
So May or June, I think we could slip below 9 million barrels, and so I think this year you could be down, almost 1 million barrels a day by the fall. And so then you could start to see prices, I think, moderate and stabilize. I'm not expecting, I read an analyst report today, $80 by the end of the year, which I think is crazy, but you could see high 40s, 50. And I think the more important part here is that I think the timing for any kind of leg downs, I think, will be behind us at that point, because I do think there'll be some equilibrium.
Yeah, you have that supply side floor and you can finally start to make that argument.
Exactly. So I think the risk of any more downsides at the end of the year will probably be minimal. But right now in the short term, with Iran coming back online, and also Libya, is putting together this agreement to have a full government again, and if they can get their act together, right now they're producing about 300,000 barrels a day, but they could produce about 700,000 barrels a day. So that's another 400,000 barrels a day that could come online. And so I think we're still very much in a supply glut situation, at least for the first half of 2016.
Okay, great. Thanks, Joe. Thanks for joining us.
Yeah, good to be here.